Hey everybody, welcome back. This is episode number 5 of the Micromath podcast. We got a full agenda today. Me and Declan are going to be talking about Fed funds rate. Just took a mega cut, 50 basis points. In our world, 50 basis points is big. Moving on from that, we're going to be actually recapping a couple companies we've talked about in the past, one of which is OpenAI. They're always in the news and there's always something exciting to talk about there. Finally, wrapping it up with a small cap stock that we discussed recently that actually one of our subscribers pointed out that there are some pretty damning short reports out. So we're going to dig into that. We appreciate the comment guiding us into that direction. We may have missed it otherwise. So Declan, Mr. Fundamentals, how are you doing since last couple of weeks? What's going on in the markets? How are you feeling this rate cut? Does that make you more optimistic? We're starting there. So let's just go right into it. What are your thoughts on this rate cut?
Yeah, rate cut was quite the shocker for sure. I didn't anticipate it being so abrupt, and it sounds like there may even be more rate cuts into the future for the rest of 2024. So that was certainly surprising. It'll be interesting to see how it plays out in the market. I think historically, when the Fed has chosen to pivot, it has been a sign that the stock market, at least in the short run, has taken some form of correction. So we'll see if that's the case. But otherwise, I got to give my props. I really think that Jerome Powell and the Fed have somewhat been able to navigate this period of intense inflation and reached a point now where things have really stabilized.
I mean, it seems like that. A move of 0.5% is pretty significant. You know, we're used to seeing 25 basis points moves, except for when it was, the Bank of Canada, I guess 2 years now, they did their full 1% hike, which was like, I don't know if it's never been seen before, but it's been, I believe, since 2008, I want to say, was when there was a 1% cut downwards. So this was the opposite move. It hurt a lot of people. I know a lot of people firsthand that were severely hurt by this when their mortgage rate went up so high. So, I mean, to see it come back down, obviously you and I as growth stock investors, we love seeing, economic easing, like fiscal easing. That's like really important for us. I'm curious what it's going to do this time around. Canada's been cutting pretty aggressively, but speaking to at least this side of the border, consumers are so over leveraged. It's unbelievable that I can't help but wonder, this maybe gives them breathing room. And they're probably just saying, oh my goodness, like now that I have a little bit of extra cash, I'm throwing that straight in the bank. That would be my instinct of what I think is going to happen. So will that stimulate the economy, make people start spending again? I don't know. I doubt it. The US is a little healthier than us. So, I mean, economically speaking, I would assume they're going to do quite a bit better. Declan, do you think that's going to start boosting some demand, maybe bringing inflation back up in the States? What do you see?
It's a tough call. I think that at least in the short run, it's certainly changing investor sentiment and likely consumer sentiment. Like you said, though, it's a tricky situation where because everyone was so over-levered and you had this sudden change in the level of debt and interest you're paying, it's still a lot to take on. And it's not like even a 50 basis point cut will make a huge difference in that sense. Sure, it may benefit to some extent, but realistically, we're still in a higher interest rate environment than we were for the previous decade. And I think people are still trying to find ways to navigate this. So do you think that this is something that for investors is really going to benefit them over, say, the next 2 to 3 years? Or do you need to see more rate cuts in order to really see that market turn around?
Yeah, good question. I mean, I'd certainly rather see a cut than a hike. So it's definitely going to be better than the alternative. I think the US and Canada are going to be a tale of two different stories. Canada, we've got, a laundry list of issues. Productivity decline, our GDP per capita is looking significantly worse than it used to be. Pretty much all levels of government are racking up debt like crazy. Living here in BC, we got a credit downgrade. So I think it's going to take more up here than, a few cuts to get things back on track. The US may be different. They are a much more productive economy than we are. They have quite a bit less leverage than we do. And the unemployment rate is significantly lower. So a cut of 50 basis points could be meaningful in the US. And they say when the US, the US sneezes, Canada gets a cold because we're so reliant on them. I think you could say there's something in the opposite. When the US economy gets a boost, that's generally nothing but good for us. So I think some of it will trickle up here, but I think we're going to see most of the benefits down in the US. But I mean, hey, what do I know? Let's see. We're expecting further rate cuts in Canada here. Some people even think that we might start seeing some 50 basis point cuts over potentially 2 in a row. So we could potentially see our interest rates coming down a full percent in the next, I don't know, less than half of a year. That could be pretty meaningful. Many mortgages are going to be refinanced in this coming year. I forget the exact number. I want to say it was something like a full quarter of mortgages are up for refinancing this year. Now, you'd think that's a good thing because rates just came down, but over the average, we're still significantly higher. Somewhere, I think even it's 200 basis points higher than the average. So even though the rates have come down, mortgages that are refinancing are still going to be in worse shape than they are now. So like I said, I think it's going to take a lot more than that. I think the next couple of elections are going to have possibly even bigger impact on what happens in the economy. I don't know if you have a different view. You're in Alberta. It's a very conservative province. How are you seeing things?
Oh, absolutely. I think there's a lot of complexity going on right now, and that's obviously nothing new when it comes to the markets and the global economy at large. But I think with these elections lining up with the current state of everything, and now the Fed taking this initiative right before, especially the US election here, we are going to see a lot of changes. And you don't know necessarily whether those changes will be good or bad, but in that sense, changes for an investor are often dealt with some form of consequences. And I think you can even just highlight throughout history, for example, when the Fed has pivot, like we can go 1969, 1973, 1981, the dot-com bubble, right before the Great Recession, the Fed chose to pivot and start to lower interest rates. And it wasn't the first or second cut that made a big difference. But what happened following that period is the stock market did see some form of substantial correction, anything above 25%. And so you don't know if that's going to be for 1 year, 3 years, 6 months, whatever it may be. But I think because investors are right now trying to navigate both the political environment and then perhaps what happens from an economic environment, there's sure to be a lot of shakeup, and hopefully investors are prepared overall.
Yeah. We're seeing a similar situation, US and Canada. Like we have these two candidates, speaking federally, that are fairly far right, fairly far left. Like there's not a lot in the middle here. And I kind of see it the same way in the US. So it's really curious to see how both these elections go. And okay, hey, this isn't a political podcast, so we don't normally get into this, but I will make one comment because, and of course you can respond as well, but we have a provincial election coming up here in BC. Historically, the last 8 years, we've been run by the NDPs. That's a fairly far left leaning party, kind of similar to the Democrats in the US. And before that, it was the BC Liberals, which are not to be confused with the federal Liberals. They're more of a conservative party, or they were. They actually don't seem to much really exist anymore. But that was a fairly right-leaning party in spite of the Liberal name. So now what we're seeing is a massive surge of support for the Conservatives for a lot of reasons. Part of which is that federally, the Conservatives are gaining a massive amount of support. So some of that has, cascaded down to the BC Conservatives. So what I would say to somebody watching this is in a couple weeks' time, maybe it's 1 week time by the time you watch this, we're going to have a provincial election that is very important, arguably more important for you in BC than a federal election might be for you. And we have these two candidates, David Eby on the NDP, John Rustad on the BC Conservatives. My personal view is that there's never one right way to govern a country. Whether it's, I think if you go too far left or too far right, you get problems either way. Generally being somewhere moderate, maybe tilting either way, I think is more appropriate. But I think it depends on the state of the times. Historically, people watching probably just assume, I'm a businessman. I like the stocks. I like low taxes. I'm probably conservative. I've never actually voted conservative. I have, in the past, I voted the BC for the federal Liberals, unfortunately, and I'm ashamed to say. And I've also voted for the Green Party, which is even further left. Now I will vote conservative for the first time ever. And the reason being, seeing where debt's gone, seeing where productivity's gone in BC here, seeing where crime, homelessness, drug use, and arguably just as important, the fiscal budget has gone. I think it's time for a more conservative party. I think we need to bring down spending. I think we need to balance the budget, actually worry about future generations and their debt burden. The interest rate we're paying in BC here is unbelievable. It's more than we pay for social services combined. We also had a credit downgrade. So because of some of those things, I think it's time for a conservative government. My view may not always be the same. That's why I've never understood somebody who thinks there's one party to rule them all. That's not how I feel. But I encourage you, if you're watching this, to do your homework. Look at the two parties. There's merits of both. You know my personal view. I think it's time for a party that's more focused on the budget, focused on the economy, but come to your own conclusion, because that's what's most important. So that was my little political aside. Maybe Declan, from your point of view, you live in Alberta, the most conservative province in Canada that somehow voted in an NDP government very briefly. Do you have any comments on what that looked like, or how that has affected the economy? Why did you guys go back to conservative? Like, how are you seeing it?
Yeah, well, when it comes to Alberta, I think the big thing is that it's kind of ingrained culturally and systemically that we are primarily conservative, for whatever reason, the policies, as well as we often do have a lower tax rate. But I think what, through the observation more than anything, is that the pendulum has kind of swung from one extreme to the other. And you highlighted that, where we're kind of in this environment where a lot of our political parties and representatives are further down one side or the other than they perhaps typically are in other circumstances. And so I think, especially now, what we're experiencing is a dramatic shift from one side to the other, where, and this is nothing new, like or Howard Marks highlights this very well in his Mastering the Market Cycle book, is that the pendulum kind of swings. It never really stays in equilibrium. It tends to ebb and flow from one side. And so I think when you look at Alberta, we have kind of progressed to our natural roots as conservatives for the most part. And for whatever reason, I think that is likely going to continue. It seems to be that over the past, gosh, I don't know how many years, but we have tended to side with that party anyways. And so I imagine it'll probably continue to happen, but I really did like your research and analysis of the current situation in BC. And I think I'm curious, like, do you see that trickling across the country at large, or is that more perhaps isolated to the West, as we're speaking about BC and Alberta right now?
Honestly, it's a good question, because I would have never expected BC to swing to conservatives. That being said, the NDP and conservatives are neck and neck, so it could truly go either way. But the BC conservatives, I'm going to get this stat wrong, but they had something like single-digit percent, less than 10% of the vote in the last provincial election. So seriously, no support whatsoever. And now they're poised to potentially even beat the NDP. So that just blows my mind. I think the reason it's happening, though, is because, I've lived in Vancouver 10 years now, and I have seen so clearly the change in the city. Homelessness has gone absolutely out of control. Crime, the instances of violent crimes have spiked significantly. We're seeing these homeless encampments. We're seeing drug use everywhere. Like, I walk down by the bay and I see somebody shooting up, sitting outside at a bus stop, not a care in the world. You see people near schools and parks doing all kinds of drugs, like things like that are just way out of hand. And I'll actually say, I don't think the NDP's decision to kind of be a little more liberal on drug policies, I actually don't think it was a terrible idea. They had support. They had support from the police as well. So it's not like they just came up with some crazy policy and tried it out. It's worked in other places in the world, in Portugal. Point is, it did not work here. I have massively seen drug use increase, the case of deaths and addictions. It's a truly dire strait. Driving through downtown Vancouver is not what it used to be. It's genuinely dangerous and very sad to see. Now, they also repealed that, and they admitted that it was wrong. So I can give them respect that, they tried a policy, it didn't work, they owned it, and they got rid of it. So I would say kudos to them for that. I would just say, I really don't agree with the state of the budget. Coming from John Horgan, who we elected as our NDP representative, had they taken the forecast for spending and they had taken the actual amount of revenue that had come in from things like corporate taxes, which ended up being higher, David Eby would have inherited almost I believe it's a $4 or $5 billion surplus that could have been used to pay down our debt, restore our credit rating, etc. Instead, the budget has gone so far the other way that it's gone way, the deficit is much larger than even they predicted last year. I think they predicted $4.5 to $5 billion deficit. It's now going to be closer to $8 billion. That is a massive amount of money. Now, I understand the need for deficit spending. For example, when we were in lockdown and COVID and nobody could work, well, you had to issue checks so that people could survive, buy food, pay rent. It was a massive stimulus. You can argue whether that was the right move or not, but point is, when the economy was shut down, you needed some kind of stimulus to keep it afloat. We're not in COVID times. Though it's not amazingly booming times, it's not the worst it's ever been. I don't think it's appropriate to be racking up gigantic deficits. And more on top of that, they don't have any plan to balance the budget either. There's no wording about that at all. It's going to get slightly less, but that being said, their budget has gone way in excess of what they planned for it to be. So I don't know how much faith I have in their future numbers. I don't think it's the right time to be doing massive deficit spending like that. Hey, in the comments, argue if you disagree with me. I love to hear other people's opinions. As you can see, I have a wide range of thoughts on the matter. But I mean, that's just what I'm seeing with my own eyes. And so for me, like I said, I think it's time for a conservative government, something more right-leaning. That's just my opinion, but apparently a lot of British Columbians agree. A couple of weeks, we'll know the truth, because who knows? I don't really know. Just like there was a shocker election for you guys and you went NDP, there might be a shocker election for us and we go conservative. I can't wait to see, but I'm very supportive of resource development. Right-leaning parties like the Conservatives are much more receptive to that. So we'll see. I think it would be much better for the stock market locally, especially resource stocks. But yeah, we'll remain to be seen. I mean, we don't talk a ton about resource stocks on this podcast, but maybe we will be in the future. I don't know. We've got a few that we've enjoyed out of your territory, Alberta there. So who knows? Maybe we'll have some BC winners after a follow-up election. We'll see.
Yeah. Well, I was going to ask you one further question. I think, going back to your experience over the past few years in BC and kind of tying it back into my own experience, I've only really been, say, from a legal election standpoint, provincially. I experienced the NDP government while I was in university, and then the current government with the Conservatives here. And then I've only experienced the Liberals from a federal standpoint. So kind of my observations throughout the years is that we've kind of built up this environment or culture in politics where these parties tend to be very partisan and focus on the short run, what they can solve in the present day, and tend to condemn the opposing party, whatever that may be. So I wanted to kind of get your thoughts on that from the BC standpoint. Do you think that, say, the NDP government, were they too fixated on what they could do to kind of prop up the government in the short run? And to your points about the Conservative government moving forward and their own policies, do you see them being able to apply more long-term thinking that really will fix some of these inherent problems that have kind of manifested themselves over the past couple of years?
Man, great question. It's tough to see, like in the same way that when you're a public company, your time frame shortens because people are going to judge you on the next quarter and the next quarter. And you see the short-term decision-making to sell assets, to pay off debt, or to boost, cash flow. Like you do these things to short-term benefit the company, sometimes at the detriment to the long-term. Politicians, I mean, they've got us, kind of like a 4-year window, if you will, right? So they know that at the end of that 4 years, things are, ideally looking better than when they started so that they can campaign and run and win again. So in that sense, 4 years is short term. When you're thinking about a country's longevity, 4 years is short. So I think they're going to fall into similar short-term traps like that. We've seen it many times. Governments, even here in BC, selling off like government land to post a surplus, going into an election to look like they're finishing with a really healthy balance sheet. So you're going to see these short-term moves regardless. It's tough to say. I mean, one thing I could maybe give the NDP a hand on is that a lot of the spending is going towards things like hospitals. That's inherently a long-term view. You build assets now, you amortize them over many, many years, over their useful life, which is, it could be 30, 40, 50, 60 plus years. So that is a long-term view. So I'll give them credit on that. I just personally don't agree with going into a massive, massive, massive deficit to get there. I would rather see a little bit more short-term thinking so that they can get things balanced sooner. They're not even talking about balancing the budget. And that's a huge problem for me when we just got a downgrade and when consumers are already super over leveraged. I think we need to be focused on cleaning up the balance sheet. So I don't know if that answers your question. I mean, I think they're going to fall into the same short-term trap. I think, something like hospitals and all that look great, short-term, it's hopefully solves some problems. Personally speaking, I think when you see bigger systematic changes, like forcing yourself to cut expenses, cut government, maybe it's entitlements, maybe it's just number of people working for the government to balance the budget. These are often short-term, unpopular decisions. Government employees lose their job. You might see unemployment tick up. You might see the GDP come down because the government's not supporting the economy. And the only benefit you might see is it could be lower taxes, or it could just be a healthier, balanced budget or a surplus. Generally, those aren't super popular. Spending money is way more popular for buying votes. So you could argue that the Conservatives are actually taking a better long-term approach by cleaning up the mess, if you will, getting to a balanced budget, because a balanced budget, that's truly long-term thinking. Right now, if you're spending money and racking up debt, you're okay with putting that on your kids and your grandkids, knowing that they'll live a worse quality of life than you, trying to pay down the debt. So you could argue that this short-term pain is actually the better long-term decision, but it might actually make them less popular short-term. So, I mean, hey, I don't envy any politician. I think that's an extremely hard job. 50% of the population hates you regardless, pretty much no matter what. So I don't know. Do you see it a similar way? Like, how do you view short and long-term policies?
Yeah, you nailed it when it comes to, I think, treating the deficit or a surplus as it is your balance sheet. And Ray Dalio does a good job of likening this to a business itself. And so when you're in that surplus, you're in a much better position financially for the long run than versus a deficit. So from that standpoint, I think that's a good thinking and approach for a government to take, is to try and find a way to balance that. So I think in that sense, that's great. And yeah, you should be able to be comfortable to kind of go against short-term popularity to benefit over the long run. And hopefully you do enough things right that it kind of sets you up where you get reelected moving forward. So I think that's a very important aspect that you highlight there, that when it comes to whether it's politics and the economy or it's a business, you got to be able to kind of sacrifice trying to tempt and sway people in the short run. And I really do think that's kind of a systemic problem right now in the West here, is we are so short-term focused. And now with the information overload that we're all experiencing, it's hard to kind of think beyond the weeds and look out 5-10 years from now and see where that goes. We're so caught up right now. And again, everybody's focused and fixated on these up and coming elections right now that it's hard to look and say rationally, what is best for our country or our province or our city 10 years out, where right now things seem tough and we're going through a lot of turmoil right now. So I don't know. It's a tough situation, because I think you nailed it, where it's very difficult, or it doesn't make much sense to just be super fixated on being tied to one party or another. Ultimately, find a party that I think positions you and your beliefs best over the long run, because like you said, it's your kids and your grandkids and all those that you need to realistically be thinking about, because when you look at the time scale right now is such a short moment in the grand scheme of things that you really need to set it up. And I think that's, again, going back to Ray Dalio's book. I can't remember the name, but I think he really highlights that this is a recurring thing throughout history, is that these superpowers, and I think it's a good example right now of the United States, is you come into this place of power. So the US really emerged as a global superpower following World War I. That was accelerated after World War II. And there was a time of great prosperity in the US. And you continue throughout this kind of flywheel effect where things follow suit after each other. You get to a point of a degree of complacency, and you're at a point now where, again, the Fed has been printing money insanely over the past like 40 years, really, since we de-dollarized and it was moved off the gold standard. And now you're at a point where the US is paying over $1 trillion in debt annually in interest expenses.
Which is insane.
An insane number.
Isn't that more than their whole military budget now? It's something
exactly
brutal,
right. Like
wow.
It's getting to a point of escape velocity. And if history does have a way of repeating itself in different forms, then you would expect that, okay, the US is arguably in a worse position now from a balance sheet standpoint, again, looking at their current deficit and where they are with their expenses, than they have been in the past. And so you just wonder, how long can this keep up? And will this trickle on to countries like Canada that are so closely tied and related to this global superpower. So it's a very difficult time, but I think we do need to find a way to treat it as if it is like a business or an investor, where we are trying to think long term and look at the grand scheme of things and realize that the next 4 years is not really going to make a substantial difference. But if you fixate too much on that, then it can trickle down and just result in a fire sale where everything goes to shit and we're all kind of panicking and trying to figure out what the heck to do in this new environment that's very tumultuous.
Well, good point on the U.S. because I mean their interest payments are insane, and yeah, their fiscal situation is worse than ours. But then their economy is better, lower unemployment, much higher GDP per capita. Like their middle class is much healthier than ours. Their costs are lower. So I mean, it's funny. Like individually, they're in better shape. Their consumers have less debt, but fiscally on the federal level, yeah, I'm very curious to see how that. Like, there's no way that ends well. And ironically, nobody seems to care. Doesn't seem like either party cares about reining in spending or significantly reducing that deficit. So I watched this movie recently called Civil War, and it was in the future of showing a hypothetical situation where the U.S. attacked itself. And there was one scene that made me laugh where someone was trying to buy fuel, and they said, "I'll give you $300 for it." And they're like, "Yeah, right, $300. That'll get you a sandwich." And he's like, "No, 300 Canadian." The guy's like, "Oh, okay, fine." And I was like, "Oh, that's hilarious! Like that's an interesting thought of the future." We'll see. But speaking of spending a ton of money, let's switch gears to OpenAI. There's a company with an unlimited appetite for a ton of money. They're actually raising more. They're targeting a $150 billion valuation, and they're looking to raise $6.5 billion in equity, another $5 billion in debt. This is in addition to, I feel like it was not that long ago when they were raising money at a 80 to 100 billion valuation. I think it was. Is that what it was? You're nodding. So that was interesting. I remember around those times, I was offered to buy some employees stock on the secondary markets, and I think 80 billion was the valuation. I declined. And I actually declined because of part of our discussions of thinking that large language models aren't the future. The quality of your data is more important than the model that you build. It seems maybe the market doesn't agree. Revenue is certainly scaling at OpenAI. Doesn't change my thesis personally. But there's a lot we could talk about this. I mean, the big newsworthy thing, other than them raising more money, is their newest model, Strawberry, which I like the name Strawberry a lot more than, what else do they call it? 01? What was it called, Declan?
Oh yeah, O1, and then
01.
Previously Q Star before that too.
Come on, guys! Like, hire a new marketing department. Like, that's insane. But supposedly, this model is better at math, better at complex problems. They think it'll be more important for scientific discovery. Supposedly, when you use it, and I haven't used it yet, it shows you more of its thought process. One example I saw was, what was it? How much cloth would you need to cover the world, or how much something would you need to cover the entire world? And it said, okay, well, first I would need to calculate the surface area of the earth. Then I would need to like blah, blah, blah. It goes through its steps. So it looks more human-like. It's slower, but apparently it hallucinates less. Do you know any more about this model? Like, what's so special about it? Why do we care? Do you know anything else?
Yeah, so Strawberry has been a long anticipated model coming out of OpenAI. So it's not tied necessarily, or OpenAI doesn't proclaim it to be chat or GPT-5. It's different from that in that it's primarily focused on reasoning. So as we've discussed in the past, one of the big problems with LLMs is, or the philosophy tied to it, is that scale leads to computing power and greater sophistication and all of that. But as we're very, very well aware of, is that these large language models, especially something like GPT-4 that has over 100 trillion parameters, it consumes a lot of energy and it requires a lot of computing and able to do it. So it's super expensive. So basically what this is derived from, this new Strawberry model, is a way to kind of be more cost efficient. So the way that most LLMs operate is they're on a fixed compute scale, where when you type out a prompt, they're using the same amount of compute every single time to arrive at an answer. Where this is different is that it now somewhat optimizes its compute. So let's say it's a more complex problem. It's going to use more compute than something as simple as show me how to bake a banana muffin kind of thing. So that's the big thing here, is that it can kind of allocate its computing power and focus to more complex issues. Now, at the end of the day, it does still experience some of the limitations that have always exist with LLMs. So it continues to hallucinate and get answers wrong. And it doesn't necessarily know that it is providing the right or wrong answer. And I was actually looking at something today of a somewhat of a review of Strawberry, and it outlined that 4 out of 1,000 times, this is a test from OpenAI themselves, 4 out of 1,000 times, the LLM or Strawberry is actually trying to deceive you. So it knowingly is hallucinating. And rather than acknowledging that, it is deciding to spit out that incorrect answer regardless. So that's something that you can imagine if this is on a exponential scale and you're running a lot of these queries or performing, and the AI is fully aware that it is making a mistake, its answers or its outputs are incorrect, and yet it's still willingly choosing to do that, no matter how, even if it is 4 out of 1,000 times or 0.8%, it's still significant. And so you have to realize that, yes, it's very impressive. Like if you look at the performance metrics in math and certain other areas like literature, comprehension, writing, it outperformed previous models. And today I would argue it is likely the best model out there, but you're still getting at that core problem of there's these fundamental issues. And as you even said, it does a better job of explaining its thought process, but OpenAI has even said that this isn't actually it explaining itself. It's just providing a chain of thought, somewhat kind of summarizing its process. So it's impressive, but I'll throw it back to you. Do you see this as being something that will be monumental in attracting users back to, say, ChatGPT and bringing more people on board? Or is this just another LLM competing against Gemini, Llama, all these different big LLMs?
I mean, good question. And maybe I just don't understand it well enough, but it doesn't really blow my mind to have something work a little bit slower, but do the task a little bit more accurately, at least for some instances. I mean, maybe once I play around with it, I'll better understand what's so good about it. I mean, hey, less hallucinations, generally speaking, is a good thing. If it's better at solving complex problems or discovering new, I don't know, drugs or something like that, great, fair enough. What I find interesting is you're really seeing the proliferation of lots of different models. And I think that's what the future is going to be. Take it one step further, the future is going to be agents that can act. They can have, you get like an Expedia agent, or maybe they call it like a travel agent, I guess. You're going to have these really custom agents that, maybe they don't need whatever you said, 100 trillion parameters. Maybe they need like 1 trillion or 10 billion if they're really customized. I think you're going to see these really purpose-built agents that are going to be really good at one specific task, but then they can all work together. So maybe there's like a higher level platform you can type into and a variety of agents will be activated, maybe something like that. But seeing it go to have specialized agents, I think makes more sense. Now, me personally, I still use ChatGPT the most, but only slightly more than I use Meta. I go to meta.ai often. It's quick, easy. You don't need to sign in. It does a good enough job on most of what I need. So it's fine. So I already use multiple models. Gemini, I've never used, but maybe I will. I've heard there's others. This specific model, does it blow my mind? Like at face value, no. I think something that's more impressive is, versus using their software to complete like the Atari test or some of these other kind of like, standard tests for AI, them being able to complete these at the same level as these larger models with a fraction of the data, that's interesting to me because that means it's quicker, it's cheaper, doesn't require as much training. That to me is more mind-blowing than something like this. So I don't know. We'll see where these guys go. Do I think they're worth 150 billion? Man, even though they do what is it, 4, 5, 6 billion in revenue, that's amazing. That's incredible. Trading at $150 billion valuation just still blows my mind. I wouldn't buy it myself. If I was offered secondary stock again, I'd still say no. I think there's things that are just more interesting. I think LLMs have just hit a wall. I don't know if this has changed, but where I last heard Sam Altman, he said that GPT-5 was essentially on hold. The training costs would be too insane to do it. I think that's why you're seeing these kind of purpose-built, like custom side models, if you will. I I don't know. How do you see this? Am I missing something here? Do you think this is bigger than maybe I'm making it sound?
No, I think your analysis is pretty solid overall. I would even wager to say that this is going to be OpenAI's final stand, kind of reigning
Mhm.
supreme as the top LLM producer. What I think has gone on here for a while is they've led the charge in developing and pushing out new models. And for the most part, users and investors have been very favorable to its development. It all has come in very fast in the past 2 to 3 years, at least from a mainstream standpoint. But what you saw here with Strawberry is OpenAI, Sam Altman, a lot of these developers within the company touting that this was the nearest path to AGI. If you were tracking them on Twitter, it was this fury of buzz and excitement, thinking that this was really going to break through. And so I think they really overpromised with what Strawberry was capable of. And when it was finally released, and they haven't even released the full version, what users realized is that, okay, yes, it is more effective in many ways, but it's also not AGI. It's not what you said it is. And so, what I kind of see playing out, and I don't know the future, I can't predict it, but what I do believe is they are going to secure this $150 billion valuation. I think they're aiming to raise $6 billion in cash from it and another $5 billion in debt. The company, like you said, made about $6 billion in revenue, or is projected to this year, but it also is expected to have about a $5 billion loss. And so this capital is much required. But again, when you discuss the core principles or the core fundamentals of what Strawberry has to offer, it is a slower, it or generates output slower, but it tends to perform better in a lot of areas. The same thing, though, is that it still requires more compute. And so there's a good example where OpenAI did this math test against humans, where both the AI and the humans had 10 hours to complete 6 math questions, and they each had 50 attempts before they were cut off, essentially, per question. When Strawberry performed this test, it ended up in the 49th percentile, so right around average across all humans. It was only when it was allowed to take 10,000 attempts that it surpassed and achieved and outperformed humans. It would have received gold in this competition. But as you mentioned about versus, that is a completely different approach where you are requiring significantly less data, like 1/10 the amount of data as these top performing models. And I would argue it's tough to compare apples to oranges in this sense, but Strawberry likely used less. Maybe it's 50% of the data that the top LLMs had used prior to it. But either way, it's not as significant as what Versus has been able to accomplish. And that's not to say we're not guaranteeing that Versus is going to come out on top. They certainly have the model and the approach, but they have to execute and reach a point where they actually get mainstream adoption and prove the capabilities. They have to maintain funding. So there's no guarantee of it. But I think the big thing here is that because you and I have been exposed to Versus AI's different approach through active inference, it has opened our eyes to perhaps another way that the OpenAI fanboys are just completely blind to right now. And so until we really see that somebody does make a monumental breakthrough towards AGI, or what we perceive to be AGI, I think this is the last leg for OpenAI. I can't see them being able to raise much beyond that if they don't continue to deliver something that is monumental. And with Google, Meta, all these companies catching up, who's to say they can outlast them if they have to compete with these giants with way more money on their balance sheets?
More money and more data, right? Google has YouTube, which we've seen that like ChatGPT, or I guess OpenAI, was caught skimming data from YouTube, which I don't believe that necessarily violated the terms of service. It doesn't seem like they've gotten in trouble for that. They did get in trouble for skimming the New York Times data behind the paywall. But basically you're seeing, like you said, larger peers that have a longer history in AI. They have more money, they have better data, and just overall bigger workforces, more resources. So the one thing that, and then when you look at these early entrants, the cost they're paying to train these models, the cost they're paying to buy these NVIDIA chips, it's all massively inflated, way more expensive than it will be in just a year. 2 years, whatever. So this isn't the first time you've seen companies bleed cash in the name of a land grab, like a new industry. Cannabis, people were building the biggest farms that they could so that they could take over the market. Blockchain, same things. Whoever had the biggest Bitcoin mine, even plant-based foods, you were seeing these people building these giant facilities to try to get their brand out there and claim market share. So it's nothing new to be burning cash to gain market share. But what I see here is, okay, fine. OpenAI was first. They got me to sign up. I used it. I fell in love with it. But now I use 2 or 3 or 4 models because nothing really keeps me in OpenAI. They don't have any kind of, I don't know what the competitive moat is. What are the switching costs? Like, I haven't seen any. So what stops me from moving to the nearest competitor when they become cheaper? I don't think OpenAI's massive amount of money is going to lead to a competitive advantage. So just like you, I think this is the final stand. I want to switch and I want to talk about GigaCloud. Did you have any final thoughts on OpenAI you want to say before we move on?
Nope, you nailed it.
No? Then let's go straight over to GigaCloud. We talked about them last podcast. If you didn't watch that, go back, check it out. One of our subscribers pointed out that there was 2 short reports against the company, and they're pretty brutal, actually. Declan, you found this stock. You went through it. You got all the notes here. Why don't you kick us off? Little reminder, but what GigaCloud does, if someone missed the episode. Don't go into too much detail. We're going to force them to go back, but then let's talk about these short reports. So go ahead, kick it off.
Sounds good. Yeah. So they build a platform, a marketplace that connects buyers and sellers. And these sellers are primarily from Asia, and they're manufacturers of large parcels, which are things like furniture and workout equipment, appliances. And they basically sell them to buyers all throughout the US, Europe, and as well as Asia. And they've just seen tremendous growth. They've grown their revenues, they've grown their platform, the number of users, their total gross merchandise value is phenomenal now. And so they've seen a lot of growth. But like you said, there's a couple of short reports that took a really big chunk out of the stock. And I think it's something that people should be paying attention to. But I wanted to throw it back to you first did you see anything different after looking into the business? Has your initial thesis on the company changed? What are you thinking?
See, here's the tough part with short reports. And just like how we've talked about the Fuzzy Panda report of, who did they call out? Was that LifeMD or no? I'm drawing a blank. It was a company that at face value looked pretty attractive, but then when you see a short report, you can't help but ask questions. So the same thing is this, where the numbers look good, but the problem is if we don't 100% have faith that the numbers are real, who cares what the numbers say? So this reminds me of, it was a long time ago before I had any activity in the market where people started investing more in Chinese companies through ADRs. So American Depository Receipts basically allows you to buy a foreign company on your local exchange. People were investing in all these Chinese companies that had this incredible growth. Margins were good. China was just this massive beast of an economy growing like crazy that we all wanted exposure to. And then people got suspicious. Why is it so good? And they started flying there. And one person who ultimately ended up being a short seller rented a hotel room with a view of one of their investments and noticed that this giant warehouse had nobody coming in, nobody leaving. The lights weren't even on in some circumstances. And then he just thought, that's so strange. How can a company doing so much revenue have no activity moving in and out of this massive facility? Turns out it was a complete fraud, and many of these companies were complete frauds. So the first thing that does for me is it does make me wary of investing in companies in China and in many parts in Asia, because there's just not the same rule of law. There's not the same investor protection that we have here. You can get away with stuff like that. Now, I'm sure it's much harder now than it used to be. It doesn't mean it's not happening now. The Chinese economy at large has been guilty of fabricating trade numbers. So do I believe a small company like this could do the same thing? Yeah, absolutely. So it kind of makes me wonder about the thesis overall. And I think before I would have any concrete comments on the fundamentals of the business, we'd need to understand how much we believe these short reports. And that's something I haven't taken the time to research yet. Let's tag them in this grisly research, Culper Research. Please post on this thread. We would love to kick off a discussion and hear what you guys said. Fuzzy Panda commented on our last video. That was very cool. I'd love to hear from them. I'd also love to hear from GigaCloud. Who knows? Maybe we can get an interview with them to hear what they say. But for right now, I don't know. I just don't feel comfortable giving any kind of opinion.
Mhm.
Have you looked at it further? Does this change your view? What are your thoughts?
Yeah. So upon initial impression, right after we had left out or published our last podcast, I would say that I was of the general impression that this was an excellent business. Revenue was growing 30% per year, net profit margins of 13%, return on equity of 32%. Really solid numbers. And when you look at performance-based metrics like user growth, again, GigaCloud Marketplace, gross merchandise value, and various other performance metrics, everything was growing. And we're talking upwards of 100% on a 2-year basis. So really phenomenal numbers. And you look at that and you would say, okay, the fundamentals are fantastic. But after our subscriber brought it up that these short reports had come out and really outlined some damning things and the stock had fallen, I wanted to dive deep. And so I did my best to try and analyze both short reports and make sense of it all, because this is a company that on the surface, I would say had the potential where I would be considering investing. But I think this is a good lesson in due diligence, where when you can kind of read these short reports that provide an alternative perspective, whether true or not, you can make a more balanced assessment and thesis. And like you said, so for context quick, GigaCloud actually moved their main headquarters to the US. So they're now considered a US entity.
Oh,
But
interesting.
the big thing is that their business is divided into really two segments. So they have 3P buyers and sellers, and those would be people outside of the own organization that are essentially purchasing, making transactions, and GigaCloud makes a portion of sales from the transactions from various services like delivery, transportation. It essentially covers it all.
So
The
it's
other
like
part of
Amazon FBA, right? Fulfilled by Amazon.
exactly.
Okay, got it.
Yeah,
Okay, carry on.
exactly. And then, so the other side of the business is this 1P side where GigaCloud actually sells its own products,
Mhm.
both on its platform and through Amazon, Alibaba, Wayfair, these various different platforms, even Walmart. The big thing, and one of my initial points where I wanted to see it improve in the business and where I think it's important, is that GigaCloud was moving away from its 1P business, because that means that they are taking a lot more costs on, whether it is manufacturing the actual products, holding their own inventory, you name it. So I wanted to see that trend kind of move away. Now, that kind of happened. But something that really was brought to my attention while reading both short reports is that they're basically arguing that a large portion of their 1P business is through operating shell companies that are being managed by people within the business. So various chief executive office, or not chief executive officers, but people like high executives in the business. And they are essentially using their name, their likeness, they're using a property, and they're supposedly acting as sellers that are not associated with the business whatsoever, but they are able to book that on their revenue, where they're basically transferring, okay, this artificial company bought our products and is now selling it on the kind of secondary market, let's say. And that was a big claim that was laid out in both of the short reports, that I was like, holy, like the amount of evidence and things that they had gathered from just that argument alone was quite alarming. And
Mhm.
the interesting thing about short reports is that the company can choose whether to respond or not. And in most cases, if your fundamentals are good, you are being a fully transparent business, there's no reason for concern. You might not even have to come out and respond to these short reports. Like why do it per se, right? If it just brings more negative attention to the business and you know that deep down the business is fine. Now, the flip side of that, if the company does choose to respond, then you should probably lay out very clearly that you can refute major points of discrepancies between what the short report is saying and what the actual business is. Now, GigaCloud chose to respond to both short reports, and they even did an independent third-party search to validate their claims after the first short report came out.
Hmm.
What they focused on was a few key points, like they talked about So warehouse operations, basically Culper Research's claim had said that GigaCloud warehouses were being underutilized, and the amount of employees in relationship to the amount of warehouses they operate didn't make sense. They talked about that a little bit. They talked about website traffic, a few different things that, okay, are, important to address, but they kind of glazed over these really big concerns, whether it was the shell companies or these fabricated sales that they were saying. And so it just, more than anything, leaves me scratching my head like, okay, well, you clearly refuted some things, but why are you not addressing these major holes that are like make up a huge bulk of these short reports? So I think that was where, no matter what, whether they're true or not, there was so much lack of clarity from the company in response to all of it that it just leaves me wondering. And I would prefer just to sit on the sideline at that point, because then you're taking on a big risk where there's unanswered questions that you may never get the actual answer to.
That's interesting. And I mean, one other thing we can look at is insider purchases and sales. So just to take a look at that, last 3 months, number of shares bought, just over 3,000, number of shares sold, 382,000. Over the last 12 months, number of shares bought, about 1,400,000. Number of shares sold, 3.6 million. So we're seeing a net sales from executives of their shares over the last 12 months. Mm-hmm. So that's interesting, especially seeing as the share price has been coming under pressure. Wouldn't that be the optimal time to buy if you feel your company is legitimate and undervalued? So the size of these sales, it's not gigantic, a few million shares isn't massive. It's the direction of the share sales and who's doing them is not what you like to see, especially when you're coming under a short report. If they really wanted to show their support, they would have, just like you said, answered every allocation, not just a few cherry pick. They would have answered all the major ones. And they would have bought shares like crazy if the share price came down. That's what you'd want to see, and saying, hey, this is how much we believe in what we're saying. We're buying shares with everything we got. And I'm not seeing that. So definitely something to be nervous about. I hope someone comes into the comments and has something meaningful to say and has some opinion on this. But that's a good analysis from you, man. And I'm curious to see where this goes. I don't have any further opinions on this company. I think it's just something that I'm not going to touch it right now. Do you own it? Have you bought it?
No, I haven't bought it.
No. Are you thinking about it, or would you?
I would say after doing this analysis and considering everything that has come about because of the short reports and just my takeaways from those short reports and management's response to them and their behavior, like you said, selling off shares, that I would probably avoid this stock personally. I just don't think that there's enough clarity and transparency to give me confidence that the business is as fundamentally sound as they've somewhat reported.
Yeah, fair enough. There's a lot of stocks out there. If you're scared about one, that's often enough of a reason to just pass over it. You mentioned one of these reports came out in May. So just looking at the chart here over the last 12 months, I'm looking kind of mid-May, they were sitting around $40. Ouch, under 18 now. So whether that's a directly related to these short reports, or I guess the latest short report, I mean, if it's not, it sure looks like it is, but that's very interesting. So I don't know much about the track record of these guys. So something else I'll take a look at, but it's not looking good. So it's not one I'm going to be purchasing, but we'll be following along with popcorn.
Yeah,
okay.
No, it's a very interesting business and crazy story for sure. So one to keep track of, and who knows, they could very well prove us wrong or prove the short sellers wrong, I should say, but it's hard to tell at this time.
Yeah, we'll see. So that's all we got for today. That was a good packed agenda, covered a lot of ground. This is it for episode number 5 of the Micromath podcast. You got Small Cap Kev, Mr. Fundamentals, and we will see you guys next time. Thanks for tuning in.